Hello, welcome to the Financial Profit. Last week we talked about the Trump recession potentially not materializing. However, increasing probabilities for a recession is all I'm hearing following Liberation Day. We witnessed a massive 5% reversal in the S&P 500 following DT's tariff announcement, and now there's seemingly pandemonium. I still think we're going through a bottoming process. So let's discuss the latest market action and what we can expect going forward from here. Recently, we discussed the coming Liberation Day and that it could lead to more near-term volatility, potentially culminating in a panic-driven capitulation-style bottoming process. Well, we witnessed about a 5% post-tariff announcement sell-off in the S&P 500. The SPX first jumped to about 5,800 resistance right as soon as Donald Trump started speaking about implementing the tariffs. However, shortly thereafter, we witnessed an extensive drop. Only about 10 minutes after we saw the initial spike, we saw markets cascading lower all the way down to the crucial resistance around 5,500 to 5,480. That's the support zone that all eyes are on right now in the S&P 500 futures. Now, this was a spectacular reversal of fortune as the market clearly expected softer tariffs from the Trump administration. However, instead of playing softball, President Trump, he went for the jugular, slapping higher than expected tariff on many trade partners. The market began dropping precipitously as President Trump whipped out his tariff table, which showed the, quote, reciprocal tariffs. However, I believe the tariffs were considerably higher and much more comprehensive than the market wanted and expected to see. Also, the stated tariffs charged to the U.S. include trade barriers like the EU's VAT tax and currency manipulation. Therefore, the underlying numbers may be higher than expected and could even be slightly over-exaggerated in some cases. Now, naturally, this makes the U.S., quote, retaliatory tariffs seem higher than they should be. And in reality, I believe that many of these tariffs will be negotiated lower and likely soon. In any case, I think the most crucial element to consider is that this is a starting point for negotiations to equalize global trade. Now, there is a reason why the U.S. has such massive trade deficits with many key trading partners. This policy is not in the U.S.'s best interests, especially longer term. And quite frankly, it's not fair. After all, why should the U.S. subsidize other countries via trade? Still, the EU and China appear particularly ticked off as China got hit with a 34% tariff and the EU got hit with a 20% tax. This may be especially kind of insulting to the EU as the UK gets taxed by just 10%. But we have to remember that what's fair is fair. The UK charges the US a simple 10% tariff, thus the US charges 10% back. Again, this highlights what's fair is fair. This is the new approach. And it's not just the UK. All countries like Australia and many others that charge the US a simple 10% tariff get charged the same simple 10% tariff right back. This is fair, right? On the other hand, now, I have nothing against the EU. I live in Europe and I love Europe. But when it comes to the EU, some of the trade agreements with the US, they're really not that fair, to be honest. So the EU charges much higher taxes, and I know this from first-hand experience. I've lived in Greece for several years now, and I bought my wife a new iPhone when our second son was born. In the US, the Pro Max cost $1,100 at that time. But living in the EU, I had to pay around 1,450 euros, or about $1,500, for the same iPhone that I could have bought for just $1,100. So I can confirm that there's about a 35 to 40% tariff, which is absolutely ridiculous. I also bought my wife a Dell computer for about 1,200 euros here, which cost only about $800 in the US. Nonetheless, when America responds with a 20% tariff, the EU gets upset. Now, Ursula von der Leyen, the president of the European Commission, threatens to retaliate injecting more fear into markets. I don't believe this to be very constructive at all. Now, for anyone who does not know who Ursula is, as many of my listeners and my readers are in America, we should examine the EU structure briefly here. Ursula was elected by the EU Council and the members of the EU Parliament in 2019 to be the European Commission President, which is essentially the highest post in the European Union. In other words, she was selected, voted in, not by the people and the citizens of the European countries, but by the top European bureaucrats to be the leader of a massive EU political and economic bloc. Ursula and other EU leaders headquartered in Brussels set economic, immigration, environmental, social, and other policies that broadly impact all EU nations and even the world. So let's talk about this sharp retaliation and why it would be a mistake. Now, I am wondering, the next iPhone I buy here in Greece, in the European Union, will it cost 2,000 euros? And maybe a Dell laptop that is worth $1,000 in the US, will it cost 2,000 euros here? How exactly would retaliation be favorable? Would it not be the consumer in the EU that suffers more and faces even higher inflation? Also, if the EU increases tariffs on US energy, EU energy costs could skyrocket. So what would happen then? Will the EU buy more gas from Russia again? While there are many uncertainties, it seems that the EU really has a limited set of options that could actually influence the US economy negatively while preserving the integrity of its own economy. Any retaliatory initiatives could come with much greater costs to Europe. Therefore, I am in much more favor of an de-escalation style diplomatic approach, which could turn out to be very positive for all parties. I also believe that a similar trade negotiation tactic may be implemented with other nations like China and other countries discontent with the current state of the trade environment. Countries can cut their trade restrictions, and the US will cut its tariffs, making global trade freer and fairer than it's ever been in the past. Now, I want to talk about America being the greatest consumer market in history. I think one very important element escaping the tariff discussion today is just how crucial the US market is for global exports. Donald Trump knows this, and whether we like it or not, he is leveraging this fact, and it could turn out to be an extremely effective negotiating strategy. Now think about it for a moment. The US is by far the most robust and dynamic consumer market globally. The US imported $3.27 trillion worth of goods last year alone, while exporting only about $2.06 trillion, illustrating the massive $1.2 trillion trade deficit with the world. However, more importantly, the enormous $3.27 trillion import figure illustrates that every foreign company, strictly from an economic growth perspective, has an enormous incentive to gain as much market share as possible in the US market. Yes, the EU is also a big market, but despite having a bigger population, it imported only around 2.6 trillion in 2024, which is about 20% less than the US. Now, if you consider the amount that it imported from the US, it's really relatively minuscule. So, much of this discussion about retaliation is more of a political posturing, I believe, instead of actual threats. Only about 330 billion of imports came from the US. In comparison, the US imported about 606 billion worth of goods from the EU. So we see the massive disconnect there. Again, highlighting the huge and unjust trade deficit. While the trade situation concerning China is different, many of the principles are similar, but we'll save that conversation for another day. I also want to talk about America innovation-wise, because we're seeing a lot of outflows, out of American stocks and out of the American market now, but that's really a big mistake, and let me explain why. Innovation-wise, America is still the best market globally. Have you seen the massive investments pouring into the US? Despite so much focus on the negatives, there are about $6 trillion worth of investment pledges in the US designed to improve the American manufacturing landscape, enhance national security, provide numerous high-quality and high-paying jobs for American citizens, and bring the industrial base back to America where it belongs. And the 6 trillion figure is only the beginning. More and more companies will invest in the US, and this is going to be enormously beneficial to the American economy, especially in the intermediate and long term moving forward. Apple, Taiwan Semiconductor, Nvidia, SoftBank, Honda, Kia, and other crucial global companies should be investing trillions of dollars into the US economy in future years. Moreover, America has many of the most innovative global market-leading companies. Just think about it. Nvidia, Broadcom, Alphabet, Amazon, Microsoft, Apple, Tesla, and many others are global giants that can't simply be curtailed or kept down for a long time due to temporary trade disputes or potentially transitory tariffs. At the end of the day, whether you are in Korea or in Europe or in Japan or anywhere else in the world for that matter, if you want to own the best companies globally, you will have to own US tech stocks. Another thing, if the US has a tariff-induced downturn or a recession, many other countries globally likely will have much more significant downturns, recessions, and potential depressions even. This is also not getting enough coverage in the news. This dynamic makes it critically urgent for countries to get to the table, to renegotiate trade deals with DT before their economies tank. Be wise, negotiate, and do not retaliate. While the EU has strong plans to retaliate, U.S. Treasury Secretary Scott Bessent warned not to retaliate, as this could lead to further escalation and more uncertainty for markets. Also, we should ask the question, what are countries retaliating to here? Quote, retaliating against reciprocal and in many cases lenient tariffs relative to those levied against the US. This may be a fool's errand, especially as an escalation in tariffs will likely hurt the other countries' economies much more than the US's. Diplomacy is always the better option, and it's certainly much better than a trade war. The EU and China have excellent diplomats and great negotiators, and I believe there could be many excellent trade deals ahead, which are very beneficial to the market. Now, let's look at the technical image here briefly. I'm looking at the 4-hour buy, which dropped to a low of about 542 in after hours, which now represents a peak to trough correction of around 12%. The S&P futures are also down by about 3.5% this morning. I'm expecting massive volume at the open, so I'm wondering if we could finally see a capitulation style bottom here, which is what the market has been missing this whole time. We need to see a sharp reversal on considerable volume today, or the market may lose more momentum. Objectively speaking, 5,500 support breaks down decisively. The next major support area is around 53 to 5,200. If this more bearish correction scenario materializes, it would equate to about a 14 to 15% correction for the S&P 500. While I view this outcome as a lower probability scenario, it is plausible, and investors should be aware of this risk. So, the bottom line here, while the bottom in high-quality stocks seems close, the newly released trade tariffs are more stringent than expected in some cases. Also, there are growing fears of this trade war escalating. Unfortunately, we have plenty of uncertainty, and now there are increasing talks of a potential global recession. On the bright side, the rate cut expectations for May have increased, but I still doubt that we will see a rate cut before June. The best bet may be for countries to negotiate more favorable trade terms for everyone, or simply remove some of their own tariffs, or practice reciprocal trade. In any case, the world should be a better and a fairer place moving forward. I remain optimistic on Q2 and on H2, despite the possibility for more near-term turbulence as the market digests the tariff news. Also, the market may move away from this tariff drama soon, as there are much more pleasant factors to discuss, quite frankly. The market could start focusing on tax cuts, deregulation, fiscal stimulus, rate cuts, and much, much more. The bottom line is that the sentiment can shift on a dime, and we could see the market moving much higher soon. Thank you for watching my report on tariffs. I hope that you enjoyed it. And more importantly, I hope that it helps you make more informed investment decisions in the future. I would also like to hear your comments. So please join the conversation in the comment section below. If you enjoyed my video, please click like, share, and subscribe to my channel. You can also join the Financial Profit, my exclusive investment community, which is Seeking Alpha's #1 service for proven portfolio profits. Thank you very much for watching. I hope that you benefited from watching my video, and see you next time. Have a great day.